says Nvidia's print could be the most important earnings event of the year so far. Let's bring in Ben Reitzes of Melius Research. Ben, okay, 3 months ago, this thing was at 305. It's at around 470 today after popping 8.5% on no news today. How good does this print have to be?
Well, there was a little news today, actually, John. At TSMC, there was some worries they were going to cut their forecast, and TSMC said that was at least a falsehood, and that came out in Taiwan. I think that provided a little relief as well. But a lot of people have been out bullish, including ourselves, and we're still very upbeat. We think long-term there's $20 in earnings power here. Not sure which quarter they'll demonstrate that, and that warrants a $625 target.
Welcome to Key Stock and Crypto channel. Don't forget to like and subscribe to the channel.
And guys, we had yield rates move up, but we saw the NASDAQ also moved up. So the reason why I'm doing this quick video just to explain. Don't forget we have tech earnings this week. So the hedge guys are coming in. So whether you're going long or going short, it's going to make these tech stocks move up short term. And we know the big one is Nvidia. And their numbers come out Wednesday, which is definitely going to move the market. And we're going to see how the media plays it. The last time Nvidia made a run, of course, it was the Fed pumping money and crypto. This time, guys, it's AI. But we know their numbers make no sense whatsoever. But remember, it's all about the fourth industrial revolution. Whether robots, algorithms, and drones take the economy over, pay each other with crypto, and the sheep go inside the metaverse. And we have Jerome Powell in the house this week. And we know the Fed is keeping rates higher for longer in order to destroy this economy. But those who have money saved up, they can actually put money in money market accounts and get paid interest without taking any risk, at least in the short term. And guys, we know the stock market is definitely going to be coming down. And that's the reason why we keep hearing Larry Fink talk about ETFs, because all these stocks are going to be tokenized and put on blockchain. And speaking of the fragmented world, we have the automobile industry looking to go on strike. But remember, guys, the goal is to get rid of individual transportation. So they don't want cars on the road. And that's why we're seeing the push of the autonomous vehicles, autonomous busing, autonomous trucking. And also a part of the fragmented world, guys, are restaurants. We know they already have the robots to fix the food and become the waiter and waitresses. In Chicago, they want to stop tipping for waitresses and waiters and just pay them a regular salary, which we know is going to hurt small business. That's going to increase the inflation that we already have, which is going to speed up the closing of a lot of these restaurants. And it's just starting in Chicago, but it's going to be moving to the rest of the states. And remember, the crypto teacher told you, because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
Best quarter for productivity in over 6 years. And if this quarter, I mean, we've been, I know the St. Louis Fed is way up there. Others are not that high. But, given modest growth in hours and in payroll, it looks like another third quarter boom in productivity. This is really saving Jay Powell. I mean, this is the best news. I mean, that's how you can have strong GDP growth without pressure on the labor market and really without pressure on inflation. That's the golden magic over here. So I think that that's really playing into what we see in the economy. And by the way, why yields are going up also, real GDP growth and real yields. I'd like to comment. You guys had a great discussion right at 6 o'clock when you opened about real returns and the tips going to 2%. Is that a way that you should now invest in for wealth? Let me mention 2% a year. It's good. It's the biggest in decades. However, 2% after inflation a year takes 36 years to double your money. At a 20 PE, which you also mentioned, which is right, that's a 5% earnings yield in stocks, the general S&P 500. That takes 14 years to double your money. So
okay, all right.
By the time you double your money in bonds, you've multiplied your money by 5 times in stocks. So people who tell me, "Oh my goodness, bonds are as good as stocks," no way for long run wealth creation.
Let's unpack that, Professor, because I think that's important, and it's kind of against my thinking on this, right? Which is
you'd like to like bonds, but you can't.
I really want to like
bonds.
bonds.
Make that case.
I'm going to try.
Nobody has ever built wealth.
Professor, you're telling me I can see this 5 juicy percent 2-year note, and I put my money in there. At the end of that period, I'm going to get 5%. And that's going to be 3 percentage points or 2 percentage points higher than the inflation rate. And I'm going to be really happy. You're telling me I'm going to be unhappy because I was better off putting my money in stocks. I should ignore those big, fantastic yields on the 2-year.
First of all, in 2 years, anything can happen. we know that. I mean, the stock market could go down 10 or 20%. I'm talking about building longer-term wealth. And I'm saying if particularly if you're young, you're building a retirement account, you're thinking about, your retirement, that's what really counts. And even 2% is certainly attractive compared to earlier. By the way, when TIPS came out in 1997, they were 3.5, and they went above 4. So, I mean, even though 2 is certainly better than it was 10 years ago, 5 years ago, and so on, it isn't all that great compared to history and well below stocks. The average over 200 years is 6.5, and I'm giving a conservative 5% after inflation rate of return in stocks. You are absolutely right. In 2 years, you might be very happy with bonds. You might not be happy with bonds, but over 10 years and 30 years.
All right, UAW members will vote this week to authorize a strike when their contract expires. The union, representing about 150,000 workers of General Motors, Ford, and Stellantis, and the big automakers are building up supply ahead of the September 15th deadline. A fight over restaurant wages and tipping flaring up in Chicago, with implications for the labor force, inflation, and the city's culinary experience. Activists want to end the Windy City's tipped wage system, under which some restaurants are allowed to pay servers less than minimum wage, as long as tips boost their earnings up to or above that level. But some restaurant owners are getting a little nervous that rule changes would force them to hike menu prices or even lay off staff.
Are U.S. Treasury bonds still safe to invest in?
Very much so. I think this is not an issue of credit rating. The United States can pay any debt it has because we can always print money to do that. So there is zero probability of default.